Hello and welcome everyone. In this session, we're going to look at how to keep the working paper for the accounts. If you're already working in a practice or if you work with accountancy firm, you already know how important it is to keep the working paper. So if you have a lot of clients, so it is not easy to remember or keep the working paper together for every single client you have. For that reason, we have to have a specific format. Now, it's very important, this Excel format, where you're going to keep all the working paper for our client. So let's have a look at the format and how does it look like. So the format is quite straightforward. Start with the initial information where we need the accountant, the firm name, and the start date, year end, VAT, PAYE, file number, and the telephone. So this is the basic information for a client. The next one, you're looking at the note. So if you have any note, we can keep a record here. And the most important information is about the bookkeeping. So when you keep the working paper, we need to make sure you have done the bookkeeping already. For example, if we done the bookkeeping on QuickBook or Xero, we should have a trial balance. And the next section we have here is called software TB, that is software trial balance. Now this software trial balance, later on, we're going to import from the QuickBook or from the Xero or from the Sage, and we're going to record here. And as soon as we record all the information, then rest of the calculation, this format will do automatically. So let's try to understand how it works. So we have few sections. Let's familiar with this section first. So once we have the software trial balance, we're going to record here. You can see I have recorded few things. For example, the accountancy fee, bank charges, business rate, cleaning, donation, gas, electricity. Then we have some bank, director current account, sales income. You might have more than that. We have to create one. If you don't see here, you can always make and you can link with the extended trial balance. So let's have a look, the extended trial balance. So ETB will be look like that. On the ETB, we have most of the information that we need to prepare accounts. For example, we have a plant and equipment, depreciation, then corporation tax, bank account. If you have more than one bank, for example, you might have a Lloyd's, you might have Halifax, you might have a more than one bank. We have to record all the bank information here. Then we have debtors. If you have a POA liability, accruals, bank loan, all of the thing we have to record here. The next one we have here, information relevant to profit and loss account. So the top bit, most likely this information relevant to your balance sheet, and here this information relevant to the profit and loss account. You can see here sales, the grant income, any other income, accountancy fee, bank charges, donation, pension, stationery, heat and lighting, depreciation. So all these things we have here. If something is not there, we can always create a new column, and on that column we can write it down the accountancy or any other category that is not here. So for example, if we don't find an expense category here, either we can change it if we don't need all, or we can create the new one and make sure it's a link all this with the software TB. Then we have some other breakdown of every single information that we're going to record. For example, we have a first one, we have a first tab that is called B. B is a balance sheet. Here we're going to looking at all the information relevant to the balance sheet. For example, the tangible asset, investment, and the current asset is stock, debtor, and the non-current asset. And we have a called up share capital and profit and loss. And we know the total asset and less current liability, that is net asset. And net asset has to be equal to the shareholder fund. So that's how the balance sheet look like when you're going to prepare the limited company account. Then you have a P. Here we're going to look at the profit and loss account. And as soon as you enter the information on the trial balance, you will see all this tab will start working automatically, and it will show how much is the portion of the rent, how much is the income, how much is the corporation tax. Everything will be calculated automatically. The most important thing for the accounting working paper is in future, if we like to see what was the breakdown of every single transaction, we'll be able to find it out. And sometimes, obviously, like if we need to make some adjustment, or if we add some balances that from the credit card, we can always see it and we can answer all the question. Because by looking at the trial balance, we cannot answer more than one question or few question. But if you're looking at the working paper, that means this is the breakdown of every single information, and we'll be able to explain, or we will be able to discuss everything by looking at the breakdown of this information. The C tab we have, that's relevant to corporation tax. Here we're going to look at how much was the opening balance for corporation tax, how much payment we have made during the year, and let's say if it is 2021 or 24, 25, 25, 26. So you're going to write it down here, and how much is the closing balance. Closing balance is a liability normally shown on the balance sheet. Then we have a corporation tax breakdown. If you do the City 600, you already know some of the expense or some of the expense it is not allowed by the HMRC for the tax calculation. For example, when we prepare our accounts, we have a profit from the account. So, for example, income minus expense, we have a profit on our accounts, but this profit is not the profit where you're going to calculate the tax. So we need to make some adjustment, and this adjustment is very important. So we need to look at the profit that we make from the account. So it's called accounting profit. And with that, we need to add fine or penalties, depreciation, dividend, corporation tax, entertainment, company formation cost, loss on sale, then balancing charge, all these things we need to add back. And also need to minus the capital allowance, balancing allowance, or if there is a profit on sale of non-current asset or disposal. And that's how we're going to find how much is the taxable profit. And on this taxable profit, you're going to calculate the corporation tax. Same thing we need to do for the capital allowance. Capital allowance is basically for the fixed asset, where normally you don't claim the expense, but gradually we claim the allowance based on the asset we have. For example, if you buy electric car, if we have a asset that is eligible for the annual investment allowance. For example, some asset goes to the general pool. So this type of asset, every year we claim some written down allowance, we claim some first year allowance. So you're going to look at that information as well, because this one will reduce the tax liability if we have a capital allowance. Then we have a D. This section is important. That's the director control account. Sometimes you call it director current account, or you can say director loan account. So here we're looking at the information for the director. So how much loan given by the director. That means if the director given any loan to the business or director have any investment to the business, this money will be on the director current account. Or if director take any money, that is called withdrawals, or we call drawings, then the capital has to be reduced. Sometimes the director of the company, if they take some money not as a dividend, then it will be treated as a withdraw, and withdraw will reduce the capital. So if you look at here, the opening balance, the add expense made by the director, capital introduced, that means all these three will increase the capital. Then we see how much is the withdrawal and the reallocated from the wages. So sometimes what happened, the director take more wages than they shows on the payroll, or sometimes the director don't take any salary of how much they are submitting through the PAYE. So this type of information also need to be adjusted through director current account or director loan account. Then we have some breakdown. So if you want to see with the date when the director gives some money and takes some money, so we can write all the dates, and the payment and the received, we can write the details. For example, if the director buy a computer for the business by paying from his personal account, so you can say, for example, 1st of January 2025, buying a computer, payment of 500. So that will add the director current account balance. Or if the director took £500 from the business on 1st of January 2025, that will reduce his capital. Then we have E section. E section is important. Here we're looking at the breakdown of our fixed asset. Sometimes we call it non-current asset. So looking at the cost of the asset, addition, disposal, and the depreciation, that will give us the net book value at the end of the year. Very important. This is the way we can tell when did we buy this asset, how much was the cost, how much was the depreciation, and how much is the net book value at the end of the year. Then we have the individual asset. For example, if you have a land and building, if we want to make more asset, we can always create a new column where we can write the cost, addition, disposal, and we can say the net book value. The next section we have for the debtors, the J section. Now the J schedule is very important. So this is relevant to our debtors. Now business can have a different type of debtors. The prepayment is also part of the debtors. Then we can have a trade receivables, and we can have a loan to the other parties that will be also treated as a current asset or the non-current asset for the business. So we have here the I section. I section represents the cash and bank. We might have more than one bank. For example, we can have a credit card, we can have a bank. So we need to see how much is the money we have for the bank. Now remember, the credit card is a liability, but the cash and bank will represent the asset for the business. Then we can make a separate, so we can have one bank, for example, this one, metal. We can see how much was the opening balance, how much we received during the year, how much we paid during the year, and that shows the closing balance. And every single information we recorded here is a link with the different column. Then 1.1, we have a bank receipt, so we can see all the information, how much money you have received from the bank, for what reason, and we can make a categorize here as well. Then we have a expense, this is the payment. And then we have another bank, for example, Lloyd's. We can have a receipt and payment. So we shows two bank here. If you have more than two bank, you can make more than that, and you can record all the information. The liability section is very important, a creditor lead schedule. So L section is very important where we're going to look at the total trade creditors. So you can see here that trade creditors, the total amount will be here, but the L1 will show the breakdown, how many creditors you have. For example, if you have more than 10 supplier, so obviously you're going to give the breakdown of 10 supplier on L1, that's on the next section. But obviously here you're going to write the total, the accruals, the rent, if there is a liability, the corporation tax, the loan account. So all this liability will be together for the L section, and then rest of the section will be the breakdown of that. For example, the trade creditors will come here. Then L1.1 will be the list of the creditors, how many creditors we have, and that's how we're going to record it, every single creditors and the liability we have. Then we have a L5 accruals, L6 rent liability, L7 mortgage. So all this thing, it depends you have it or not. It's not necessary you have to use everything, but if you have, you need to use it. Then you have a K section. K section is relevant to the share capital. Now, normally the called up share capital for a company, for example, 100, normally it always 100. So if you have a closing balance from the last year, you recorded this year. So that's how it will carry forward. So that's how it will work. So this is very important information to keep the working paper for the company, for the client. So once you prepare the accounts, if you enter the trial balance here, so this will be your record, all the adjustment, closing balance, snap of the bank statement. So what happened in later on, if any case, if the question raised, what is the breakdown of this, what type of adjustment you make with the director current account, what type of creditors you make the adjustment, how much money receive on the bank, the closing balance, bank statement, everything you'll be able to find from this Excel working paper. So it's a wonderful thing to keep the record for a client individually for each company, and that's how you can keep this working paper, especially if you work in the practice, you know how important it is to keep all this working paper. So hopefully this information will be helpful for you to understand, and in the future I'm going to show this working paper to open a company, and I will show you how to record all this information on this working paper. Thank you very much.